over the past month or so, mortgage interest rates have been slowly coming down, and that has led to a number of headlines like this. House price crash averted as mortgage rates plunge. Now, to be fair to the headline, mortgage rates have indeed come down slightly from the peak at the end of 2022. But I think to say that the house price crash has been averted is stretching things a little bit. So in this video, we're going to be taking a look at why the mortgage crisis is far from over and why this house price crash has only just begun. Now, if we go to the mortgage comparison websites, and I've popped in a mortgage here, it's a 25-year mortgage for a £300,000 property, which is about the UK average price, with a deposit amount of $75,000, which would actually put us at a 75% loan to value, which is a typical mortgage loan to value. And the market leading rates, historically speaking, don't look too bad. 4.3% isn't a bad interest rate historically speaking. But when you say historically speaking, you're talking 15 years plus. If you're talking about what's happened since 2008, since the global financial crisis, in the last 15 years, these interest rates are very high. We have to see the current interest rates through the context of what has happened to the housing market over the past 15 years. And the current prices, the current house prices, have been driven by low cost debt, i.e. debt that's around about 2%. So 4% is still a major problem for properties and mortgages that rely on much lower interest rates. So it's always important to see interest rates in the context of what's happened recently, more so than what happened 15, 20 years ago. Also with interest rates, there seems to be a lot of people talking that interest rates have peaked and they're going to start coming down later this year. Now, it's okay to have that theory, but let me show you this. This is interest rate expectations. This tracks where the Bank of England felt interest rates were going to go since the start of 2022. And let me just turn off my webcam so you guys can see this fully. So in March 2022, the Bank of England felt that interest rates were going to peak at about 1.5% as we came into 2023. And then as things started to reveal themselves and the markets weren't looking so great, the Bank of England started to predict a peak in March 2023. So their prediction in, summer 2022, interest rates would peak in March to April 2023 about 2.7%. And then we had the mini budget. So in September 2022, they then started predicting a peak of 6.4%. And now all of a sudden we're predicting 4.5%. So this will peak during the summer of 2023. So I think what this clearly shows is that predicting interest rates, or the Bank of England predicted interest rates, are basically pointless, because look how wrong they've been over the last year. They've been from 1.5% all the way up to pretty much 6.5%, and now we're back down to 4.5%. So anyone that thinks that mortgage rates are going to continue to come down this year and just predicting it, we just actually don't know what's going to happen. And in my opinion, based on the data I'm seeing, if they do come down, I don't think it'll be by very much, but I think there's a lot more potential for things to go badly wrong that could see them actually go back up. But we'll see how this year plays out. Now, the next thing I want to show you, and I've talked about this in a previous video, is that when they say the mortgage crisis is over, it's barely started for the majority of people. So this chart in front of us shows how many people remortgage every single quarter, or roughly how many people remortgage every quarter. And the yellow part of the bar shows how many people remortgage from under 2% existing borrowing. And the red part shows between 2 to 2.5%. So basically everyone that is remortgaging, or everyone that has been remortgaging since the start of 2022, is remortgaging from an interest rate under 2.5%, with the majority being under 2%. And if I just turn off the webcam again, you can see this is how many people are expected to remortgage throughout 2023 and into 2024. So we've got some months over 300,000 people are going to be remortgaging. Now, the mortgage crisis only started 3 months ago. So we've had one quarter, we've had Q4 2022. These people have remortgaged, and most of them probably actually didn't remortgage onto a fixed rate. Many of them went onto the standard variable rate in the hope that mortgage rates would come down and they could fix up again soon. So we got all of these people every single quarter yet to feel the pain. We've had one quarter of people that have felt some of the pain, and now we've got every single quarter. Over 300,000 people are going to be remortgaging from mortgage rates of 2.5 or below, with the majority under 2%, to interest rates well above 4%. And the ONS themselves, they back up this data. ONS says 1.4 million households face higher remortgage rates in 2023. More than 1.4 million UK households face the prospect of interest rate rises when they renew their fixed rate mortgages in 2023. The majority of fixed rate offers in the country, or 57% of these types of loans coming up for renewal in 2023, were fixed at interest rates below 2%. So despite the fact that mortgage rates might be coming down to where they were a couple of months ago, for pretty much everyone that is remortgaging at the moment, their interest rates are going to be going up. They're going to be doubling. They're going to be going from around about 2% to 4% plus. So the mortgage crisis has literally just begun for those people. Now, the next thing is the Bank of England are still expected to hike rates further. So they're meeting this week. They're predicting another 0.5%. So we're currently at 3.5%. I'll hide myself yet again so you guys can see this. And they're predicting, hopefully, I'm hoping for another 0.5% to take us to 4%. But we'll see what happens. They may lose their bottle. And then if we do go back to the prediction, they're currently predicting the 4.5% as the peak. My current gut feel is that we do not get to 4.5. I think we might get to 4.25, ruling out anything happening with the other data that I have been talking about. But when they say that this crisis is over, does this look like a chart where the crisis is over? Because it certainly doesn't to me. It looks like where things have just begun and everyone's about to start feeling the pain of what's happened with these 9 sequential interest rate rises, with a 10th one expected this week. And following on closely from that, we have the gilt market. And this is something that I've spoken about in previous videos as well. The gilts have been coming down, and that is why interest rates have been coming down on mortgages, because this is the rate at which lenders lend to each other before they lend to the public. And if you look at the 1 month view, it does look very good. Things have been coming down very, very nicely. But if you go over the 1 year view, we are still, I would say, we're still in an uptrend. This trend has not been broken, and it's going to be very interesting to see where things go over the next couple of months. Because if we do break this trend, then okay, yeah, maybe interest rates will come further down for mortgages, but we'll see if this holds up, because this uptrend still looks pretty good to me. And if you drew a line that would be supporting all of these low points, all that happened was that we burst out of kind of the upper end of the channel for a bit, and now we've come back down. But we'll see what happens. Keep an eye on gilts as a leading indicator as to what is going to happen with mortgages. Another thing to keep in mind with the mortgage crisis is we still have cheap mortgages that are supporting the housing market. We still have cheap mortgages being used in housing transactions. And the reason I know this is I have a friend who completed on a house last week at the end of January with a mortgage he had agreed, I think, in August or September last year. So we still have pre-Truss, we still have pre-mini budget mortgages supporting house prices. And you can see here, how long does a mortgage last? You'll find a standard mortgage offer is typically valid for up to 6 months. So that could be mortgages as far back as, I think, August will still be available for using in transactions this month, and potentially as far into next month as well for ones that were approved in September. So there are still these mortgages about. They're still supporting house prices. It's going to take another few weeks for them to fully be out of the system. And then all housing transactions are going to take place with new mortgages at higher rates. And that's where we're going to really see the pain for the housing market. So that's something to keep in mind, is that these mortgages are still part of the system, but they are finally starting to get flushed out. Now, the next few things are the obvious ones that we've been talking about for months and months. Inflation is still at crazy high levels. And again, I've seen lots of similar articles about inflation as I have with mortgage rates. Inflation's coming down, inflation's fine, this is going to save the housing market. Even if inflation went to 0% tomorrow, we're still over 10% more expensive than we were 12 months ago. And that's just the official figures. We all know really it's more like 15, 20% plus for most things. The chances are we'll probably end up with an inflation rate of somewhere around 5 to 6% later this year. And they're going to try and sell that to you as good news. But believe me, it is not. That's another 5 or 6% on top of that 10, 15, 20% that's already taken place. So inflation isn't going to save the day when it comes to mortgages or the housing market. We've got the UK economy is likely to officially enter recession. We had a negative growth in Q3 and we're expecting negative growth in Q4 as well. And the UK never actually recovered to pre-COVID levels. So the economy was already struggling a lot before the events of the past year. And on top of that, we have UK public sector borrowing. The UK government borrowed 27.4 billion in December. What happened to Jeremy Hunt balancing the books? Things do not look good. And if the markets lose confidence in the UK's government's ability to service the debt, guess what happens? We see the gilts shoot up, and that's potentially what we could see happen again if they do not rein this spending in. So it's going to be interesting to see how that plays out, because if the gilts go up, then mortgage rates go up, and that's going to be even more pain for the housing market. So those are the three things that we're all aware of. And then finally, we have market sentiment. And this is so important to the housing market, as if market sentiment is negative, buyers are going to be very unlikely to buy. So the ONS have just reported their first official month-on-month house price drop. If we can look here, the average UK house price was 295,000 in November 22, which is still 28,000 higher than in the year previous, but down slightly from the previous month's record high of 296. So from October to November 2022, we saw a month-on-month decrease in house prices. Now, what that actually means is that house prices were falling before the mini budget. So before Liz Truss came along, house prices were already falling because of the interest rate rises that the Bank of England had already making earlier on in the year. And the reason this is so important, that house prices are coming down and it's being reported so late. So for example, this data is basically 7 months old. It's published in January 2023. It's for a snapshot in November 2022 of transactions that were agreed 4 to 5 months prior to that. So this data is about 7 months old. And what it does is, because we know house prices have been falling for the past few months, we've seen it in the Halifax and nationwide indexes, and anyone that tracks Rightmove can see the amount of reductions that are going on. This lag guarantees that pretty much for the rest of the year, we're going to see, every time these figures come out, we're going to see negative news stories about house prices falling. So that's going to keep market sentiment suppressed, because all of these stories are going to be negative about house prices falling. You still occasionally, from time to time at the moment, see positive stories. But I think when you start seeing Rightmove, Halifax, Nationwide, and the ONS all reporting steep month-on-month falls, that's going to completely destroy market sentiment, and that's guaranteed to last most of this year because this data lags so much. So that is why I think this mortgage crisis is far from over, and why the house price crash has only just begun. If you want to see the one big thing that I think no one else is really covering enough that is going to really contribute towards this crash, I'm going to pop up a video in front of me now. I recommend you guys give that a watch, and I'll see you over there.